I do, however, have a recommendation for you. It's been a while. We've been so busy on the show that I've not been able to do recommendations, but I have one today. I've been reading just as much, just not doing recommendations. I just finished up the third edition of Nobel Prize winner Robert Shiller's book, Irrational Exuberance. This book was initially published in March of the year 2000, and it now is in its third edition. And I am so conflicted about the book because the book, not about the quality of the book, but about how I should deal with what the book says. Because Robert Shiller is making very, very clear that he sees major bubbles right now in the stock market and in the housing market. Major, major bubbles. Now, as you may know, my philosophy of investing is don't try to time the market. Do not try to time the market. If you have some kind of philosophy or program that you're on of regularly contributing to an investment account, to a retirement account, whatever, don't try to figure out, oh, now is a better time to buy. Right now isn't so good, so I'll wait 3 months and then buy 3 times as much into my mutual funds. Over the long term, you're better off not timing the market and just dollar cost averaging in. However, Robert Shiller makes a very good case that right now, the market, the stock market, which Donald Trump is taking great pleasure in reminding us about how well it's doing, is drastically overvalued. And that is a reason not to continue buying up stock. So I don't know what the answer is. And I posted to my Instagram account that I was reading the book maybe about a week ago, and someone said, you know, David, these books are interesting, but if you take them literally, you would not make the wisest financial decisions, in the sense that if you read Robert Shiller's Irrational Exuberance and then decide, well, I've got to get out of stocks, you could accumulate taxes on short-term gains. There could be all sorts of other implications. And if you're in it for the long haul, it might not end up making that much of a difference to get out now and try to rebuy at a lower rate. So anyway, a lot of interesting stuff in the book. It also destroys efficient market theory. Efficient market theory is the idea that at all times, stock prices, and you could apply this to housing prices as well, they always reflect all relevant information. Now, that can't possibly be true, because if at all times stock prices reflect all relevant information, they would reflect the fact that there is money to be made on particular stocks, and thus there would no longer be money to be made on those particular stocks. So you know me, I have a background in sort of rational actor economics, neoclassical economics, but I think it's basically bogus in understanding how the real world works. And I think that behavioral economics and market psychology tell us a lot more about how markets actually work. And this book also builds on that idea. So I couldn't recommend it more highly. Irrational Exuberance by Nobel Prize winner Robert Shiller. You can use the link in the video description on YouTube to buy the book and send us a little kickback. And you can also go to davidpakman.com/recommendations. And anything you buy there will send us a kickback if you buy it through Amazon. It's the Friday show. Let's take a break. Glad you're with us today.